Hello and welcome to Market Fatafat. This is Mansi Dave and with me is my colleague Ankita Saxena, and together let's take a look at what's happening in the market. Not that a great start to the week as we see as the global markets are volatile, and then came the eventual impact on the domestic market as well. While we started, the Nifty did open in red with 25,653, and at present also it is hovering around the same levels into red patterns, quite volatile. And Bank Nifty also did open on a flat note at 60,093 to be precise, 25,546 as we speak on Nifty, around 150 points down. Same is the case with the broader market. The mid-cap and small-cap also did see declines towards downtrend and a lot of volatility. However, there are stock-specific opportunities, but the experts also completely advised to exercise caution at this point in time because there's a major trigger, which is the budget, which is awaited. And at the same time, if you see the major contributors at present in the market, it's HUL, Maruti, Tech Mahindra, ITC, Axis Bank. On the flip side, ICICI Bank, Reliance, TCS, Infosys and Wipro are quite volatile in trade. If we talk about the sector-specific approach of the market, barring the FMCG and a few banks and financial counters, literally all the sectors are trading in red. So clearly not a great start to the week, and we also have our market expert with us joining in. Let's welcome Samit Johan, Head Research Technical and Derivative Angel One. Samit, good afternoon. Thank you so much for giving your time to EP Now. As we see a lot of volatility in the market, and let's say the sectors, the index, as well as the stock-specific approaches are missing. What's your take on the market and how are you strategizing the same at present?
Since last couple of weeks, in fact, we have seen good correction, healthy correction in market from the levels of 26,200, 26,300, and now we are trading around its crucial juncture. So we are seeing 25,500, 25,450 as a crucial juncture for market. It was a previous breakout point as well. So technically speaking, previous breakout point has a significance when it's retested. So in case of a breakdown below 25,400 on the closing basis, we could see this correction getting extended towards say 26,200, 26,000 also. But as of now, we are not expecting any major correction as such. So 26,200, 26,000 in probably worst case, this could be a healthy correction for the market, and then probably we could see some consolidation, and then probably we could see again Nifty reclaiming 26,000 in coming weeks.
Okay, so that's the take on the market. It's a contingent scenario at present as we see for the indexes at present. But then moving on to the stocks and picking it right from the banks and financials, let's pull up ICICI Bank. The company did post its numbers and were quite a miss as per our estimates. The company did see a decline in the profit figures, the net interest margin and net interest income also. If we have a look at the provisioning, around 19% down towards quarter on quarter, and it also did see around 10% downtrends on a year-on-year basis. However, the provisioning figure did come at 4683 crore, and at the same time, we also did see a miss in the profit as well as the revenue figure, the interest margin as well as NII. But moving ahead, banks and financials, as we see the quarterly updates were quite positive, but at the same time, larger banks, after they did come up with their results, are seeing declines. And as we speak, around 3% downtrends in ICICI Bank, 1370 is the level where it is trading at present. But then, Samit, PB Fintech, let's take a look at that stock. It started at around 1620 level, and at present it is trading at day high at 1672. In the last 5 trading session, it did see quite volatile trends, but today it's quite a day for PB Fintech, even when the markets are showing signs of declines. What's your take for the ones who have existing positions into PB Fintech?
See, throughout this month, this stock has already seen massive correction from the levels of 1950. Today we are seeing some respite to this recent correction somewhere around 1600, 1650. And if you look at it from a slightly broader perspective, it seems that at least for a while 1600, 1620 would act as a support. And today's entire candle, it has already engulfed this previous bearish candle. So that's a positive sign. So at least it calls for some sort of pullback move towards 1720, 1750, which coincides with the 20-day exponential moving average as well. So from here on, for a timing, we expect correction to halt, and a pullback towards 1720, 1750 can be seen in next couple of weeks' time.
All right, so that's the view coming in on PB Fintech as far as the technicals are concerned. But let's move on to a counter that is in focus on the back of Q3 earnings. That is big boy Reliance. That reported its Q3 numbers. As far as the PAT is concerned, that's up 0.7% on a sequential basis. The consolidated revenue is also up 4.1% on a quarter-on-quarter basis. Now, the retail revenue was up 8% and the O2C revenue was also up 1%. And the Jio ARPU also saw a marginal uptick at 213 rupees on a quarter-on-quarter basis. And the subscriber base has also done well or remained strong as far as Jio is concerned. But a couple of brokerage notes then, a couple of brokerages that are positive. Nuvama is maintaining a buy call and they've hiked the target price to 1,808 rupees. Motilal Oswal has also reinitiated coverage with a buy rating and they've hiked the target price to 1,750. Now, CLSA is maintaining an accumulate and they've set the target price at 1,650, with the Macquarie also maintaining an outperform and set the target price at 1,650. Now, Morgan Stanley, JP Morgan is, however, maintaining a buy call, but they have cut the target price to 1,675, and UBS is also maintaining a buy, but they have cut the target price to 1,790 rupees. So that's how the brokerage, mixed brokerage calls are coming in for Reliance, but net, an inline set of numbers is what we see coming in for big boy Reliance.
Absolutely. So the results of Reliance were much awaited, and once they did come up, we also have brokerage reports coming in, and at the same time, the stock is performing as per the results, and the brokerage notes are also quite interesting, which Ankita just highlighted. But taking a look at the real estate sector, is the real estate sector which is not performing in trade at present, and if we see all the larger players as well as the smaller mid-cap real estate companies are also showing signs of declines. And in particular, if we talk about Sobha Limited, the company did come up with its results, and after the company posting the numbers, the stock saw a decline of around 4%. The share did slip around 3.9%, logging an intraday low at 1,466. The selling pressure on the counter came after the company did post its Q3 numbers, and as we speak at present, also around a 2% decline is what the company's the stock price is witnessing. The net profit did come at 15 crore as compared to 21 to 22 crore for Q3 FY25, which was down around 29% on a year-on-year basis. In terms of the revenue, the company did stood at 983 crore, down 21 to 22% from 1256 crore a year ago. The company's earnings before interest, the EBITDA also did see declines on a year-on-year basis, and the margins were flat at around 8% on a year-on-year basis. So quite a weaker set of numbers, and on the back of same around 2% declines is what we see in Sobha Limited. And not just Sobha, the entire real estate sector is also showing signs of declines for the trading session today. But let's pull up Bajaj Finance, and would want your view, Samit, on Bajaj Finance, particularly Bajaj Twins for that matter. The stock is trading in green, Bajaj Finance 969, and in the last 1 month we did see signs of almost a downtrend for Bajaj Finance, but now the stock is showing signs of pickup. At present, around 967 from 950 as where it started to start the day with. What's your take on Bajaj Twins and in particular Bajaj Finance?
Yeah, as far as Bajaj Finance is concerned, this stock, was hovering around its 200-day simple moving average since last 4-5 days. Today, since morning, we are seeing good buying traction in this counter. It is now challenging its 20-day exponential moving average. So once this stock surpasses 980 on a closing basis, we could see this move getting extended toward 1,000 first. And there's a crucial downward sloping trend line resistance around 1,000. And once 1,000 is broken, we could see the stock rallying towards 1,050, 1,080 as well. So as of now, 930, 940 should be seen as a make or break level, at least in the near term, because below this, will not be surprised to see this stock heading towards 860, 850 kind of zone. So 930, 940 should be seen as important support, and once this stock surpasses 980, we could see a good move coming in this particular counter. As far as Bajaj Finserv is concerned, this stock has been in a consolidation mode for a quite while now. As of now, we are not seeing any major momentum as such.
All right, moving on to the next counter that is in focus today, and that's TechM on the back of good set of Q3 results. In fact, TechM, we do see the revenue that has come in at 2.8% higher on a sequential basis. The PAT, however, was down 6.1% quarter on quarter. The revenue has beaten the street estimates. On the back of that, we do see the stock that's up and away more than 3.5%. There's an exceptional loss on the back of the labor code charges of 272 crores, and therefore the decline coming in on the PAT. We have Nuvama that's come out with a note, and they have upgraded the stock to hold from reduce earlier, and they've also hiked the target price to 1,650 rupees. They feel that it was a strong quarter by TechM. Revenue growth 1.7% in constant currency terms on a sequential basis. That beat their estimates. The TCV was highest ever at 1,096 million US dollars, and under the leadership of Mohit Joshi, TechM is making its business fundamentally strong and sustainable while successfully balancing growth and the margins. They remain skeptical on the 15% margin target and the forecast 14% margins in FY27, which will also be a big achievement for the company. Now, they have turned positive on TechM, but relatively expensive valuations is what Nuvama is saying. But TechM, on the back of positive brokerage note and good set of results, that's up and away more than 3.5%. But as the world's political and business leadership converges at Davos from the World Economic Forum annual meeting 2026, Andhra Pradesh is stepping into the global stage with a sharpened pitch. Led by Chief Minister N. Chandrababu Naidu, the state is positioning itself as not just an investment destination, but as a long-term growth partner that is contested for global economy. Let's take a look.
The World Economic Forum 2026 opens against the backdrop of geopolitical uncertainty, slowing global growth and a renewed push for dialogue and cooperation. For Indian states, the focus this year is clear, moving beyond intent to execution. Among the most visible Indian participants this year is Andhra Pradesh, with Chief Minister N. Chandrababu Naidu leading a high-level delegation to position the state as a future-ready economy aligned with global priorities. The state is showing a wide sectoral canvas ranging from aerospace, defense and space to drones, electronics, semiconductors and advanced manufacturing. Clean energy remains central to the state's global narrative, with strong emphasis on green hydrogen, renewable energy, shipbuilding, port-led logistics and integrated industrial corridors. Technology-led growth is another pillar, covering IT, AI, quantum computing, deep tech, global capability centers and large-scale skilling through global educational partnerships to build a future-ready workforce. Last year's Davos engagements laid a solid groundwork for Andhra Pradesh, which recorded high investor traction, with the state accounting for nearly 25% of India's total investment announcements in the first 9 months of fiscal year 2025-26. Institutionally, Andhra Pradesh partnered with the World Economic Forum to establish India's first thematic center for energy and cyber resilience. As Davos 2026 begins, Andhra Pradesh is not just pitching projects. It is projecting a long-term vision anchored in technology-driven governance, clean energy, advanced manufacturing and global collaboration. And this year, Chief Minister N. Chandrababu Naidu is all set to further push brand Andhra Pradesh onto the world stage.
Welcome back. You're watching Market Fatafat with me, Mansi Dave and Ankita Saxena, and absolutely the Q3 result impact on the markets as we see Nifty at 25,582, down about 100 points. Bank Nifty also showing signs of decline at 59,976, almost 350 points down as we speak. But let's take a look at Jindal SAW. The company did showcase a weak set of numbers, but on the contrary, the stock is performing absolutely high in trade today. Talking about the results, Jindal SAW reported a 49% drop in net profit to 258 crore and a 6.2% fall in the revenue for the December quarter. The shares of Jindal SAW ended quite lower on the Friday session, but the Monday start was quite an upbeat for the sector, for the stock in particular as we speak. Around 15 to 16% of an uptrend in Jindal SAW. What helped the stock price was the order book scenario. The iron and steel pipe segment order book did hit record high, while the quarterly revenue and the profit figures were down, but the strong, robust pipeline for the company did help the stock for that matter. But Ankita, what's happening with the IT sector and in particular Wipro?
Absolutely, Mansi. Wipro, in fact, has slumped almost more than 7.5%, almost 8% in trade today on the back of tepid revenue outlook and a lackluster deal win. In fact, if you look at the numbers for Wipro, the PAT is down 3.6% on a sequential basis. The revenue, though, saw an uptick of 3.8% on a quarter-on-quarter basis. Now, the PAT was down on the back of the new labor code impact that saw almost an impact of 303 crores on the PAT. The quarter-4 revenue guidance has been revised. It's between 0 to 2% in constant currency terms, which has been a rather tepid outlook for the revenue. And also, there has been a lackluster scene as far as the deal wins are concerned. So on the back of that, Wipro is down and out, taking it on the chin today with cuts of 8%.
Absolutely. So that's Wipro. So that's Wipro and IT sector. To start the year with, we did see good signs in the IT sector and the mid-cap IT space as well. But after the results coming in fact, Infosys, after coming up with the results, also did show signs of an uptick. But Wipro is showing signs of downtrends, absolutely mirroring the results for that matter. Taking a look at the auto as well as auto ancillary space, and while we talk about the auto ancillary space, talking about CIAT, the company is slated to post its quarterly results, and at present the stock is ranging in positive. And if we remember the last quarterly numbers of CIAT in particular, the company did rose quite a bit after the numbers came in because the numbers were quite strong and positive. The tire maker did showcase around 52 to 53% increase in the revenue in the last quarter, that is the quarter 2 results. And also the brokerage bullish reports also did say that the demand upturn is something which is going to benefit the tire maker, while the strong consumer facing segment exposure is something which is helping CIAT for that matter. At present, 1.6% upsurge, 3855. And today also the company is slated to come up with its numbers, and the stock is ranging in positive. Now let's take a look at what happens. But all in all, the auto sector is showcasing volatility, and the auto ancillaries are also showing signs of declines, barring a few tire makers like CIAT, 1.6% up as we speak. Ankita, what is it that you're picking next?
Right, we'll go to Samit, and he's picked out Godrej Properties for us. In fact, Godrej Properties, Samit, this stock has been in a sharp corrective mode. It's down almost 25%, in the last 6 months, and today also it's declining away with cuts of more than 4.5%. Do you see this downtrend to continue, or do you see signs of reversal?
This clearly is stock is like a falling knife. Stock has been correcting sharply from last 4-5 trading sessions, and with this price correction, it has now finally given a breakdown on the weekly time frame charts. Since last many months, 1950 was acting as a very strong support. So this multiple support has been breached successfully. So which suggests that this correction is likely to extend. 1700, 1720, these are the next levels to watch out.
So that's the word coming in on Godrej Properties. Moving on to the next counter that is in focus today, and that is HDFC, that is in focus with an inline set of numbers that it posted. In fact, if you look at the numbers, the PAT is up 11.5% on a year-on-year basis. The NII also saw an uptick of 6.4% on a year-on-year basis. The asset quality remained rather flat on a sequential basis, and the core net interest margin is at 3.3% on total assets. Now, Bernstein has come out with a note and maintaining an outperform with the target price that's set for 1,200 rupees. They feel that the quarter 3 was rather steady with consecutive commentary, constructive commentary, and a clear improvement in the credit growth momentum. Also, the management has reiterated the guidance of system-level loan growth in FY26 and faster than system growth in FY27. Now, the LDR on a downward slide path with margins that are supported by the Lagarde deposit repricing, lower borrowings, and gradual CASA improvement. Also, as far as asset quality is concerned, that remains pristine with no emerging stress across the portfolio. And on the back of that, Bernstein is maintaining an outperform. We are seeing HDFC that's given up all the morning gains, currently reeling under selling pressure of 0.2%. But that was the last talk for the show. Sami, thank you so much for taking the time out and joining us. Mansi and I will take your leave. Thank you so much for tuning in.